Gregg Bell serves as the Chief Investment Officer at Hashgraph, part of the Hedera ecosystem. Now, previously, he was CBO at Hedera Foundation and was the head of growth at Binance US. And before that, he co-founded and helped scale the asset management business at A3 Financial Investments and the crypto lending business at Salt Blockchain, where he served as Chief Investment Officer and Chief Operating Officer. Gregg's entrepreneurial and investment experience spans more than 15 years and bridges traditional finance as well as digital markets with roles at two multi-billion-dollar hedge funds. And with me is Gregg Bell in our latest installment of Markets on Chain with the Global Blockchain Business Council. So great to have you here.
Thank you. My pleasure.
Let's just kind of start with like the big 30,000 foot view, the macro look at digital asset adoption on the institutional level. Like, what are you seeing there?
Well, it's interesting. I think we really sit in a period of time where the market is in stark opposition to the adoption story. So, Bitcoin and crypto assets broadly have been trading down over the last year, but the reality is that the institutional adoption has never been more real. And that's really exciting because we're seeing more and more engagement specifically from the financial sector, but enterprises globally. And that's the sweet spot that Hedera has always occupied. Hedera is a unique blockchain and that is really focused and run and operated by Fortune 500 type companies, from tech giants like Google, IBM, and Dell to financial firms like investment bank Nomura, Shinhan Bank, Standard Bank, and others. So it's an incredible period in the adoption story of this technology.
So why do you think there is that kind of disconnect? And where do you think it will ever kind of come together?
Yes, I think what's really occurred more recently, and this is influenced in large part by the regulation that has been Clarity Act and Genius and others that have influenced global policy, is that the risk calculus for an institution to onboard to new enterprise software has changed. In order to deploy a application on Hedera, you need HBAR, the native cryptocurrency of the network, to provide the gas to function any of the contracts. And so, it was very difficult for an institution previously to hold on to assets. Now that's changed. Now there's clarity in terms of how to report these assets on a balance sheet, how to the tax treatment is. And so, what was a largely ambiguous landscape now has the ability to address many of the concerns that come from a CEO, from a CFO, from chief compliance or head of regulatory.
Yeah.
And so the institutional adoption is occurring. And this is similar to the retail or individual adoption cycles that we had in the past. And so I do think that as institutions really start to use this new technology, we'll see that reflected in the price action of various assets.
Now, the interoperability too has been an issue. Has that made progress, or where do you see that?
That's a big topic, of course, and that's one that the development team at Hashgraph really has focused on, because nobody wants to be stuck in a silo.
Yeah.
Silos on liquidity, silos on technology or vendor lock-in. And today, when we describe this blockchain industry, we often describe it as Web3. But the reality is there isn't really a web component of it. It is very siloed in a series of integrations and infrastructure that is required to deploy any applications. And so where we've been focusing our technology development is around how assets can move more freely from one network to another. And the real use case has been also around privacy. So the full suite of products that Hashgraph offers is not just the Hedera public network, which is akin to the internet in many ways, but also Hashspheres, which are private instance corporate run networks, which are akin to an Ethernet. And so you want the ability for assets to exist in both environments and be able to move interoperably between the two. And more importantly, find liquidity across other public networks as well. And so that is a product that we call the cross-ledger protocol. And it is a means by which one network can speak directly to another network without a centralized intermediary, without a trusted party in between. Because unfortunately, the industry has seen time and time again that is the point of attack. That is a vector where a lot of loss occurs.
Wow. So that would be really kind of transformational for the kind of the advancement of blockchain.
Yes, I think it's needed. I think that the ability for connecting the web and making blockchain technology interoperable is going to be a huge watershed moment for the industry.
Now, you mentioned asset classes, so stablecoins have gotten a lot of attention. I mean, is that that group benefiting the most? Where does like Bitcoin and Ethereum come in? Do they all have kind of different roles to play as this technology moves forward?
They do have different roles to play. Stablecoins are, of course, a really important one. What we're starting to see now with the enterprises and the adoption of Hedera is that the acceptance of stablecoins for payments and goods and services is just beginning. Today, the reality is that 90+% of the volumes for stablecoins are really to fund cryptocurrency exchanges. So it's to trading of Bitcoin and HBAR and other assets.
Okay.
And a large part of that is because the cryptocurrency exchanges are those that accept stablecoins for their services. So plugging into the treasury management systems and the ERP systems that enable invoice payments on the enterprise level will enable the use of stablecoins that now, of course, have the clarity from the regulatory perspective to start to really be the plumbing of our economy.
Do we need to see tokenization really kind of come full to be able to use the stablecoins in that way?
Ideally, they are very compatible.
Okay.
So what we love to see are really three elements that come together when we're talking about tokenization or stablecoins. The first is trust. Hedera and blockchains are fantastic tools addressing trust. And so that's where you can provide attestations or information that creates and embeds an asset with more value. When you're talking about a security, that might be the coupon payments, the maturity date, the attributes of that specific security. And then the asset itself being tokenized. And once it's tokenized now, it has the ability for being more mobile, being able to be highly divisible, being able to be moved programmatically. And then the last component of that, of course, is the cash leg. Many assets pay dividends, have distributions, or have internal cash flows. And so having a stable coin that can function as that cash leg within a security is a critical component to the overall picture. So you really want to combine all these three. So the security side plays heavily into stablecoin deployment and the use cases. But the use cases, of course, also exist around payments.
Yeah.
And so when we think about sort of the verticals at Hashgraph that we're most focused on, really is around tokenized securities, tokenized deposits, bank deposits, and stablecoins for cross-border payments and the payments of goods and services.
Now I have to ask about AI. Does that play a role in all this too?
Oh, absolutely.
And how?
Yes. I mean, AI plays a role, I think, increasingly in all of our lives.
That's true.
Hedera is very unique in its structure in that there's a specific service called the consensus service. And this provides what I would equate to a notary. It's providing attestations of a whole bunch of different information points that are timestamped and publicly visible. And what that does is it improves trust. I think when it comes to AI, a lot of people are talking about agentic commerce. So an agent moving money on your behalf. That, of course, is a huge unlock. It sort of accelerates the robo-advisory and a lot of the velocity of money and whatnot. But a more fundamental component of that is the trust or the credentials that go into enabling that agent or those agents to operate on your behalf and in what environments, under what constraints. Now we know that agents and LLMs hallucinate. And so having something that we can look into and say, here's the audit trail. Here is the validated proof of action that an LLM has performed. That is an incredible application on Hedera. We've seen companies like EQTY Labs, Equity Labs partner with a variety of companies, including embedding directly into NVIDIA chips, Intel chips, this type of hashing functionality, also with Dell in partnership there to bring together this trust infrastructure for AI and applicable to LLMs, whether it's Gemini from Google, and of course Google is a operator of the Hedera network as well. But it's applicable to Anthropic and OpenAI and DeepSeek and others because it's on the chip level. So there's an incredible intersection between blockchain and AI.
It's going to be absolutely fascinating to see how all this plays out. Now, the ETF moment. So when do you think that goes on chain?
Yes. So Hedera was really excited and proud to have HBAR listed on the NASDAQ earlier in last year. It was the third asset following Bitcoin and ETH to have its asset listed in the US in ETF form. I think that's both a recognition of the maturity of the technology and the stack and the providers that are ultimately running Hedera and its unique value proposition. But having an asset that is on an ETF broadens the distribution. It broadens the accessibility. And so the ability for investment advisors and retail individuals to buy access to HBAR through an ETF without having to deal with the complexities of custody and wallet infrastructure, that is a value proposition. And to me, Hedera really occupies a unique position because HBAR is in many ways a narrative around global enterprise adoption of Web3 technology or blockchain technology. There's no other asset that's out there that in a singular component can give you exposure to Fortune 500 type companies that are operating a network and providing exposure. In so many ways, it's akin to the S&P 500, right? You have access to gaming, oil and gas, financial services, telecom, consumer staples. Mondelez, maker of Oreo cookies, is out there running Hedera, in addition to firms like LG and Tata and Dell. And so you have an incredible assortment of various financial firms and global enterprises. FedEx, one of the largest operators on a global basis of moving real assets around the world, is looking at Hedera and saying, all right, how can digital assets play a role in providing efficiencies for their business model?
Okay. And then governance, in terms of just a risk management tool, how would you describe that?
That's a real differentiator. And I think when enterprises are considering which networks to adopt today, there are a variety of different criteria they assess that may be very different from what an individual chooses to look at. So understanding how a network's roadmap is developed and understanding the attributes that are applicable to the business needs. And so Hedera's corporate governance and enterprise first focus really has aided it in its moment at today, right? Where a CFO is saying, well, can I budget for the transactions? Well, Hedera has fixed predictable fees that they can budget for. There's not the surge pricing friction that you see across most other networks. You have a governance model where you have known validators. So the sanctions or OFAC risks that a bank or a financial market participant might take, where gas fees are paid to an unknown anonymous validator, which can be material in size too, is not applicable to Hedera because there are already trusted Fortune 500 type entities that are operating the network, and those are exclusively those that are validating transactions. So it's not just the governance side of the foresight and the minutes that go into advising the direction of the network's development, but it's also the actual operating of the network itself that really benefits from the scalability and uptime and performance that enterprises provide.
And then finally, let's bring this to kind of mainstream America or even globally. How will people transact, operate? What does the blockchain mean for them?
Yeah. I really hope and I believe that in the not too distant future, it's really going to be a scenario where Hedera is under the hood, where other blockchain networks are under the hood. And McLaren Racing is part of the Hedera ecosystem. And so at some point, it's going to be like the engine, and you get in the car and you go from point A to point B and you go there lightning fast.
Sure.
And that's going to be the experience that individuals and businesses are really going to value, and that there's improved infrastructure, improved experience of how money moves around, how assets move around, and importantly, how assets are viewed as collateral. And we're seeing this now with the DTC and other institutions that are utilizing digital assets as collateral to enable improvements in their businesses. So we saw this last year with Aberdeen and Lloyds Bank providing, utilizing money market funds that are tokenized on Hedera for collateral mobility and addressing some of their FX inter-day risks. We're seeing this in sandbox environments with ISDA and the GDF and a variety, over 120 financial firms and banks and clearing institutions and Ernst & Young and others, law firms all come together at this moment and saying, how do we enable tokenization for securities? And so this is ultimately where I think, of course, Larry Fink has seen this as well. The tokenization of financial securities of all types is coming. And that's where individuals will see that it will be under the hood. It'll be new and improved experiences, better risk structures, and hopefully value capture for everyone.
Well, and maybe 24/7 trading, or even the ability to invest in some assets they haven't been able to before through tokenization. So it's a really exciting time to kind of watch. And it seems like it's going slow, but...
Well, I think that the markets can be very loud because you see the price action on a day-to-day basis. But the adoption story is harder to see until it becomes very, very public. But that is so incredibly vibrant at the moment, where institutions are increasingly building out teams, increasingly deploying, and being thoughtful, of course, how they do so. But that's where the scale of institutional flows is significantly different from an individual. And so
this has been a typical year, I think, for this whole industry. So thank you, Gregg, for being a part of the Markets on Chain series with the Global Blockchain Business Council.
My pleasure. Thank you so much.